Hey guys, Steve Ferguson, your modern mortgage loan advisor today, coming to talk to you about some recent things that are changing in the mortgage industry. They're going to be very impactful, some good, some bad, some we may love, and some you may want to stay far away from. We're going to break that down in this video today. But before I do, please like or subscribe to this channel. I would really appreciate it. It definitely helps. And we always like to bring great information to you, and you liking or subscribing to this channel and asking questions and communicating help me do that. So let's get started. So there was an announcement that President Trump recently made where they're trying to bring in a 50-year mortgage. I believe that was originally thought of by Mr. Pulte of Pulte Mortgage. And so what does a 50-year mortgage do? Okay. So a traditional mortgage loan is based on a 30-year amortization. So that means it's over a 30-year period of time. If you borrowed $500,000 based on a specific interest rate, it breaks it apart over that 30-year period of time. Now, the way the mortgage interest rates work is interest tends to get prepaid in the very beginning of the mortgage loan. So for you guys that are homeowners right now, as you're looking at your mortgage statement, right, you can tell that when you first started paying your mortgage payment, more was going to interest than to principal. The longer you have your mortgage, it starts to shift, and you're paying more towards principal and less towards interest. So over a 30-year period of time, you'll see that amortization schedule itself out, so you know when you're paying more and more principal. Now, on a 50-year mortgage, the same thing would happen, except you'd be paying a lot more interest over a 50-year period of time. It's not that your loan amount changes, it's the amount of interest you pay over that point in time changes. Now, I know that the argument says, who pays off their home on a 30-year mortgage now? Nobody ever does. We're trying to make mortgages more affordable. Now, look, I understand the argument for what the intent of this is, but wouldn't it make more sense just to lower the cost of mortgages, and that way you don't have to finance it for a million years? That's my 2 cents. So what's driving home prices and what's driving the thought behind this 50-year mortgage? Well, the situation you have right now in America is right now corporations can buy residential homes. So let's say BlackRock or one of those other companies out there says, you know what, I got $1 billion that I want to invest. One of my safest investments is residential real estate. I'm going to buy a whole lot of houses. Now I can take that asset that I just bought, 5,000 homes in Austin, Texas, as an example. I'm going to rent all of them out. So I'm going to make rental income. I'm going to write all those expenses off of our tax returns from a corporate perspective. I'm going to depreciate all those houses. So now I'm looking really good on taxes. And guess what? When the economy turns, I'm going to offload them and make a bunch of money. So you have artificially either drop the home prices or increase the home prices, and you've also artificially modified rents. So what that does is it prevents the normal person like you and I from buying a home that's a reasonably priced home, because these big corporations are buying them in swaths, right? It's like, I'm just going to buy all these homes at the same time, drive prices up. And then you've got a lot more renters on your hand. Nothing necessarily wrong with renting, except the number one wealth driver in the United States right now is owning real estate. That's the traditional way to build wealth. So if you don't have that vehicle to build wealth, how else are you going to do it? You can do stocks, bonds, CDs, all these other things, but you don't have the comfort level of being in your own place. You don't have the ability to earn equity based on the values of the home prices, or doing what you want to with that residence. So in my opinion, the better solution would be, hey, look, corporations stop buying residential real estate. That is no longer allowed. You cannot do it. If you want residential real estate, build your own. And there's plenty of people out there that build them. I see companies all the time that go in and they're building subdivisions full of rental properties now. They're not even selling those houses. They're just building them from the ground up. Great, build them. If you want them, build them. But don't go buy properties right now and prevent other homeowners from either selling to just an individual person who wants to buy, or a buyer now having the inability to buy the home that they wanted to buy because we've artificially increased home prices. Now, historically speaking, if we're looking across the country, some areas of the country are priced lower than other parts of the area. Now, there's a whole lot of reasons for that, a whole lot of different economic indicators pointing to different directions. A lot of times on coastal areas that are much more expensive. You also have politics that get involved there. But overall, I would say the number one factor driving home prices right now is corporations making large investments into residential real estate. So Instead of a 50-year mortgage where you're paying a ton in interest, because the only person that gets benefited when you're paying interest is the bank, not you as the homeowner. So just keep that in mind. Now, the other thing that's an interesting thought here, they haven't mentioned what the interest rates could be on a 50-year mortgage. What traditionally happens is the shorter your mortgage term, the lower the interest rate. So I would assume the opposite would be true. The longer your mortgage term, the higher the interest rate, because that bank has to carry that mortgage forever at 50 years. So imagine you're Bank of Steve, right? And you're like, all right, a guy wants a home for 50 years. I'm going to finance this, but man, I don't know what rates are going to be in 25 years. This person may or may not pay off this rate or this mortgage. They may never refinance. We have no idea. So I'm going to make that interest rate attractive enough for me to say I'm willing to outlay that money for 50 years. Chances are these rates may be a little higher on a 50-year mortgage. I'm concerned about that as well. In my opinion, this is a turn down. I would not do a 50-year mortgage. It is more popular over across the pond in Europe and everything, but nobody ever pays off their homes. It's all like they're a bunch of renters forever. And so I'm a big fan of home ownership and then leveraging equity positions to get where you want to go, buying investment properties, et cetera, from an individual perspective, not a corporate perspective. So that's my 2 cents on the 50-year mortgage. Now let's talk about the secondary piece of information that came out, which was DU, which is Fannie Mae essentially, has said they're no longer going to have a minimum credit score requirement on conventional mortgage loans. Now look, guys, this is a nothing burger. The credit score was just one of many factors that DU looked at in order to get you qualified. So them effectively taking away the 620 minimum credit score, do I think it's going to have a substantial impact on the number of people that can qualify? No. And the reason for that is the guidelines still are essentially the same. So it's unlikely for somebody that has a credit score less than 620 to meet the guidelines required for DU. Now, there will be exceptions to this rule, and I'm sure that it will open up a few more opportunities for buyers. But in regards to a game-changing situation, I don't see this as being a game changer. Now, a game changer would be, hey, you know what? We're going to go to, if you paid your rent on time for the last 2 years and all the rest of your credit is terrible, but you paid your rent on time, now you get a home loan. That's a game changer. There's plenty of that out there. Or we're not going to have the requirements in place anymore regarding derogatory credit that's over 6 months old. Guys, we all have a past credit history. The challenge with mortgages and getting more people to qualify is they look at it for a very long period of time, and they have restrictions on the type of income that can be used. So for example, if you had a late payment on a mortgage in the last 12 months, it's very difficult to get a mortgage loan. There may be a great excuse for why that happened, and you can prove those things, but traditionally speaking, it doesn't really matter. It's based on what the credit report says. If they gave you more ability to say, hey, look, here's the reason, here's the excuse, that gives us enough indication that you're still a good homeowner, I think that's a lot more valuable than just saying we're getting rid of a credit score requirement. Because again, there's 3 bureaus that report on the credit report, and they all have different scoring requirements and different scoring models. So I don't see that as being a big help. There are other ways to get these people more qualified and to get you guys more opportunities to get into a home loan. Number one, relax the restrictions on the income. Look, it's very cumbersome right now to verify income for mortgage loans. It's very specific. They account for every possible situation. Look, if a borrower wants to go out and get a second job to qualify for a higher mortgage, let them. Don't make them have a 2-year history of this before they step in to get a mortgage loan. Allow every piece of income to be counted. Right now, if you want to count overtime income as an example, you have to have a 2-year history of receiving overtime. What happens if you just got a job where you just started overtime? Listen, there's a lot of different features I think that are more valuable to getting more people into home loans than just getting rid of a credit score requirement. That doesn't do just a whole lot for us. So let's backtrack into this a little bit again. I think both the 50-year mortgage and the 620 minimum credit score, both of those things sound great in a perfect world. But when you really get down to the nitty-gritty of this, I think that they're not going to do a whole lot of anything. I think that you're going to have people that will qualify for these individual specific things. It'll be a small percentage. I think it's a Band-Aid when, we need stitches and surgery and everything else in the mortgage industry because it's gotten so tight that it's difficult for normal everyday families to qualify. And so give people the ability to use income. They're driving, they're delivering, whatever it happens to be. They're delivering groceries, they're doing extra things. Allow that income to count without having a 2-year history of it. Give more flexibility to the income requirements. I think we'd see a lot more people qualify for mortgage loans We could get rid of this 50-year nonsense where everybody's paying a ton of money in interest, where it only benefits, the mortgage people and the banks. Now, granted, we would offer the 50-year mortgage if it came available, but would I recommend it to my clients? Not unless they had no other choice. So keep this in mind as you're looking at different lenders out there. There's a lot of people out there right now going, this is awesome, this is awesome, this is awesome, because they're thinking about dollars in their pocket versus your personal financial situation. Look, find people to say this is a bad idea, because then at least there's a differing opinion out there than the media and everybody else that's touting these kinds of things. Not every program is a good idea. So you want to work with a loan officer who's willing to take the time, invest the time to figure out your specific situation, your specific story, and make sure that you're well educated on exactly what you're getting into before you sign on the dotted line. Because remember, I'm not making your mortgage payment, you guys are, and you're stuck with it for 30 years or 50 years, whatever that happens to be. If you want to get out of it, it's going to cost you a bunch of money because you got to refinance out of it. So once again, do your research. Find the information out there that's both positive and negative and make a decision for yourself. Now, in the meantime, drop some comments on this video. I want to know right now what's keeping you from buying a home loan if you've tried to buy one, because there's some programs out there you may want to look at that give you more flexibility. Number two, if you're thinking about buying a home in the future, would you like a 50-year mortgage, right? Does that make sense to you? They've kind of done that in the car industry because cars have gotten so much more expensive. They're doing 6, 7, 8. I think there's even some 10-year car loans out there to make cars more affordable. There's other ways to drive down those costs. So I appreciate you guys. Thank you so very much again for watching these videos. Drop a comment, drop a like, share my videos. Don't forget to like or subscribe. And I hope you guys have a wonderful rest of your day. All right, we'll talk soon. Have a great day. Bye-bye.